With the CPI print coming in tomorrow, indices being around their all-time highs, the huge drop in metals, and a sell-off in Chinese stocks with the percolating issues around geopolitical conflict, you might ask yourself, damn, what should I do? Everything is so conflicting. So in today's video, in our macro update, I want to break it down for you, what I'm doing and what are the great plays in those turmoil moments around the markets where you should be allocated. With all that said, let's go. Good morning, good afternoon everyone. My name is Russ and today Wednesday, our macro update here on DataDash. Let's start. First of all, people are asking me, especially in our Telegram alert group, Russ, what is your view right now? Should I be sidelined or should I act aggressively because everything is an all-time high? So other asset classes are just gonna pick up and follow liquidity, gonna flow from one asset class into another asset class to make sure that everything reprices and goes to all-time high, because we're in a soft landing and Fed is starting to cut and everything is seeming like working out well. Especially before the elections, nothing wrong can happen. That's the only way things can work. And I see all around Twitter, I see all around media, those 6,000 price targets for S&P and so on and so forth. Everyone is really bulled up, and I am quite bulled up myself because I see that inflation is sticky, and at the same time I understand that stock prices are also driven by the inflation, and this is the reason why I think we're gonna see much higher prices from here. But at this point in time, for the record, the day prior to CPI, I want to stay cautious. And being in the macro trading for years and years taught me one thing, that sometimes not being in a trade is also a trade, and sitting on your hands and understanding when to be sidelined and to keep your dry powder is actually a very important skill. The skill that allows you to identify the easy modes and the hard modes and act accordingly. Without further long speculation, let's just get into the data and see what has happened during the last week. First of all, Friday, after my previous recording, we received a bunch of the jobs data, and non-farm employment change, you see this 254,000 is significantly higher than the forecast. So that's kind of good. That means unemployment rate is also down. That means that US job market is quite strong. So obviously with that kind of job data, the target rate probabilities for our 7th of November Federal Reserve meeting, where we're going to decide the next target rate, has significantly changed. How did it change? Well, first of all, no one anymore in the macro world is expecting that Fed going to cut 0.5% or 50 basis points. You can see that just a week ago, we were pricing 35+% probability that Jerome Powell going to cut another 0.5%. But right now, that's completely out of question. That's why we only have 2 blue bars here instead of 3 as we normally do. Now, majority of macro traders are pricing only 25 basis point cut opportunity, and moreover, some of them are actually saying, well, there's not going to be any cut because cutting in this environment is criminal. Well, you can find another adjective for those, and I would say it's in any case a drastic change from a week ago, because no one a week ago would predict that Jerome Powell would come on the 7th of November, less than a month from now, and during the first week after election, and basically say, you know what, we keep the interest rate as it is, because that will be controversial to the dot plot that Federal Reserve showcased us just a month ago. And on top of that, to make everything more complicated even here, we have that very important CPI print coming tomorrow, 10th of October. You see the forecast is 0.2, the yearly is 2.3, and the preview was 2.5. That means that it's much harder to meet the forecast. So what's going to happen here? If instead of forecasted 2.3 value, we actually going to receive, let's say, 2.4, and we're going to go again in red as multiple times over the previous five prints. So that's going to signalize to the market that Fed have their hands tight and cannot make another cut just like that. And now just think what kind of pressure it's gonna add to already quite an aggressive spike into the US government bond 10-year yields. You remember, since we met on Friday, I was telling you guys that does not look too good to me, and that's the reason why DXY was spiking. The market is starting to price in the idea that Fed might not cut or might not cut as much as market wanted it to cut, with the strong job data and everything. So yeah, it's like a huge move. It's a 8% move. And if I'm gonna just look here on the relative chart of US 10-year versus German Bund 10-year, you can see that in the last 2 weeks, this disparity is almost 20% up. So on top of that, it's a market structure break. On top of that, you see how strong this uptrend is. And what does it mean for us? Well, it means that a lot of cross-border capitals are gonna move from euro into dollar. And as you remember, the mother of all charts in the risk on assets, in crypto, in metals, and so on and so forth, is the DXY. And you see how DXY is starting to feel that. You start seeing here, DXY even starts to accept above our 102.6 level. And I was telling you guys always, this is one more spike in DXY that I am expecting. I indicated it also in our Telegram alert group. That's why I was not rushing anywhere. I was telling you not to rush anywhere either. That is exactly what I mean, expecting one more spike in DXY and then down, but obviously, of course, I was providing the levels, and for anyone following me, it's not a surprise that we first need to reach at least 103 level, and potentially maybe 103.8. We're gonna evaluate from there. Moreover, looking right now at the major pairs constituting DXY, I see there's a lot of traders, a lot of forex traders that would expect here the local low, the higher low, and they would start longing British pound, giving it extra strength. The question is if we're gonna print actually somewhat that someone gonna call head and shoulders pattern. I would like to not call it this way, but in any case, something that would actually create the market structure break here. We don't know. We don't know yet if it's gonna look like that, like a continuation pattern, or if it's gonna be actually the reversal pattern. But what we know that in this zone, there's gonna be a lot of macro traders stepping in order to long British pound even further. And I think the same with Euro USD. And it doesn't mean that it's going to work out this time. I'm looking at Euro USD. Actually, I see here how we are not able to reclaim this local high, and it is especially with this yield relation that I just showcased between the US and Germany. It is quite likely that Euro might start accepting here in the lower range, and this is, despite all the efforts of macro traders trying to predict the low here, that's going to give another strong move to DXY. And this is the reason why you can start feeling those already yesterday in the market. Gold had a worst day in weeks. So gold actually has moved down yesterday roughly 1.7%. Gold to silver ratio obviously spiked up, and that gave us a 5% down move in silver. I would not worry too much here about gold to silver ratio market structure break, because I would normally expect something like that. Yeah, it happens. We created a number of divergences here, but as I said, fundamental ratio 48. That's where my midterm scenario fundamental ratio is actually rather 20, but 48 is something midterm I'm expecting. And what I really want to showcase here, and that's the reason why we actually went into metals, is that despite silver had this very huge down day, very huge down 5% day, what is really striking to me here is that strength that we had in miners versus silver. And I'm again opening here the simplest basket of CILJ junior silver. Not interesting to me, miners. And we had here a very green, very intense day. Also notice that candle, how it's been formed, 4% up. And so SILJ itself is already up on a pre-market, and yesterday, despite this huge drop in silver, we just corrected 1% down. So most of my favorite junior miners, namely, let's take them. Let's project them on the chart. Outcrop silver, absolutely no down move whatsoever, is printing Adam and Eve or cup and handle or wherever you're gonna call it on the midterm time frame. But of course, long story short, you're just gonna see that potential for breakout here, and then I'm going in a weekly, and then I start see my next target zones. And yeah, that's something I'm very confident in. We are well allocated here. Another 50% move can happen in a matter of a week. Yeah, you will be surprised probably, but those junior miners are moving very significantly. Same with Minarum Gold, breaking out of this multi-week consolidation, retesting that breakout, closing above. I also think that's a very good play. If you are not yet allocated, it's still time to do so. And so on. I would not go through every junior miner. We gonna provide the list in the Telegram group for those who is not allocated. I think the overall picture is quite clear. What I'd really love to showcase here is also Palladium. I think Palladium provided us yesterday an amazing moment where we could add up, because you can see this break in the market structure here. We've been creating this swipe. I've been indicating those weeks ago, and now we broke this previous high. We created higher high, and now we're just retesting those breakout zone. So taking into account what would be the mean reversion move into this metal, I would not be shy to project at least 100% move in the metal itself. So for the miners, for SBSW or for PLG, for our favorite miners, especially taking into account their cost structure stays the same, but the revenues are increasing, so there is already a huge beta which is pretty much hidden in their stock price. I would consider not to miss out on them. Sibani Stillwater is also looking like a great accumulation is happening. Remember, people were screaming, "Oh my God, we lost the support." That means we need to sell. I was telling you, no, that's the PO3. There's Mr. Market Maker is trying to get you out of the position. We had our accumulation, we had our manipulation, and now we're going to have our distribution. And our distribution can take us quite high here into two-digit number. I would not be also shy away of predicting those numbers. On top of that, in our Telegram group, I've been indicating a couple of sectors that I really like. First of all, I've been saying that Lithium ETF has bottomed, in my opinion, at a very important Fibonacci retracement at 0.786. So on top of that, RSI divergence on the weekly and so on and so forth. I would not repeat the message over the Telegram group, but yeah, if you look here on the Lithium chart, obviously that's the reason why I went heavy on Piedmont Lithium. I also built a position in a smaller lithium miners. Piedmont is roughly, let's measure how many percent, is roughly 120% from the lows. So I really had an amazing position right now. I sold some calls on it. On top of that, we entered the smaller miner. I would not give it here on YouTube because this is a junior miner, so the stock price will be significantly affected if just everyone enters. But for those following me in the Telegram group, all the names are provided there. It's just indeed, guys, please try to understand, like sometimes I'm even scaling in with like $100,000 position, and that already affects the stock price, sometimes as much as like 5-10%. So obviously I'd like to keep those plays for a smaller group, but once again, you can just play the ETF game. Maybe it's safer. On top of that, I've been indicating the agricultural commodities like potash, for example. And here I am back to the chart. The chart is on a daily, but yes, you can see also the market structure break here, and also in the weekly and our Telegram group, you can see what is the reason for me to actually put more attention into this asset class, because this breakout on the weekly out of multi-year downtrend, this is something I like to be in. And for those people who follow me for a little bit, you guys know that very often I am not as bad in spotting the reversals in the bottoms. Like very often we enter very close at a very favorable prices. And what's so important, why I like to enter those favorable prices, because my invalidation point is very appetite is very small, so my risk rewards are very high in that particular regard. So yeah, sometimes it's 7-1, 8-1, and on top of that, for people also who follow me in Telegram group, you know how I love to sell the cash secured puts, how I'd like to be allocated below the market. For everyone who misses this idea, still doesn't understand how it works, I have a video, specially dedicated video on the wheel strategy here on DataDash in educational videos. Please go see those playlists. There are multiple educational videos that I've created. So it is very important that sometimes price never goes as low as your allocation price, because you've been collecting the premiums through assignments, and that's extremely favorable for you to be assigned at a price that market has never seen. This is also possible. And once again, indicating those for people who probably miss my videos, that sometimes you can get an assignment below everyone. And this case, your stop loss will, protect you. It will be never hit. And so you can ride the entire momentum. You can ride the entire wave up, make sometimes 100, 200, 300% that most of the portfolio managers would only dream of, because they are not able to use option assignment for multiple reasons. Some of them are not knowledgeable enough, some of them are too relaxed in order to have those strategies, because they already have great volumes and they just take 220. Some of them are not able to use them due to the huge volumes, and they will be affect the option chain. So it's not necessarily that everyone is not smart enough. That just sometimes people have so huge volumes that they just cannot operate through option chain assignments and so on. And maybe to close today's video, because I see we have a lot of ideas, a lot of trades, and you remember people were asking me in the Telegram group, oh, should I add into my TLT position here, or TMF, which was a leverage TLT position here at around 100. I've been saying no, guys. We sold everything below between 100 and 101. We completely went out of this ETF. That it happened, that the Fed made a cut on the 18th of September. It became a sell the news event. And obviously right now, with the US 10-year growing for multiple reasons, growing for the reason of especially strong job market, or Fed inability to cut the rates thanks to the strong job market. Despite all of that, we actually are reaching right now our zone of support that more often than not served us as the bounce place. So you might start building your position, but please be very careful here. You need to still understand a bit of a macro to understand what's going to happen, because if CPI comes hotter than expected, if it comes above the expectation, obviously it would even give more confirmation to the market that Jerome Powell is not going to be able to cut, and the US 10-year yields might go even higher, and people would sell out the bonds even further. And so that would probably mean for the chart that first time in a while, first time since March, we're gonna lose this line, and in this case you would have to cut. So once again, build your position, but be careful, watch closely CPI tomorrow. And with all that said, I wish you an amazing continuation of the week. I'll be back on Friday to update you on actually how the CPI was released, how it's going to play out. Much love to all of you guys, and I see you very soon. Bye.